Hey guys, how's it going? I'm Lewis Harding Investor and welcome back to my channel. And in today's video, I'm going to be going through the best tech stocks to buy now in 2022. Let's get straight into it. Intel is the world's largest semiconductor chip manufacturer by revenue, and based on my DCF valuation and for my free cash flow estimates, I've actually used a flat figure of $15 billion for the next 3 years. Analyst estimates are quite unreliable for this company in my opinion, they're showing anywhere from 3 billion all the way up until 20 billion, so I've used a flat rate of 15 billion, basically a lot lower than 2020s, and I've gone from there. I've used my required rate of return of 10%, and we're looking at a share price of $47 per share. I think this is quite conservative from my assumptions, and from the current share price of below $45 per share, it's looking like Intel is looking like a decent buy at current prices. A few facts about them. P/E ratio of 9, which is way below the market average at the minute and the historical market average, and I've currently got a nice dividend yield of 3% as well. So Intel is looking very, very interesting. So company 2 on my list today is Meta Platform, so formerly known as Facebook, the social media giant which owns Instagram, Facebook and WhatsApp. These guys have taken a battering recently and using a required rate of return of 10% and free cash flow estimates from analysts. We're looking at a share price of $266 per share, and then adjusted for the net cash they have, $283 per share. And from the current share price of $204 at time of recording, it's looking like a really, really good deal, and you're looking at way above 12% annual return at current prices if they can deliver on these growth rates. Currently the P/E ratio is below 15, which I think is astonishing for a company like Facebook. Such a high quality business. There will be a video coming soon on them, because I currently think this is one of the best market opportunities in a long time. So the company is very profitable, high returns on capital, basically no debt, net cash position. It is a cash cow, cash generating machine, and I think the market is wrong on this one, and hopefully I am right, because I do own this stock. So the third and final company on my list today is Alibaba. So the Chinese Amazon, most people will know this company as. It's the Chinese e-commerce giant, and recently over the past 18 months the stock price has absolutely collapsed. With my 10% return using free cash flow estimates from analysts, we're looking at a share price of $159 per share from the ADR, all converted from Chinese yuan. So yeah, it's currently looking very interesting. The current share price of Alibaba is $114 per share, with a P ratio of 16. This is looking like another really, really interesting pick. Quite a few famous value investors are now into this stock as well, most namely Charlie Munger, through the Daily Journal Corporation, their investment portfolio. But yeah, Alibaba is looking very, very interesting at current prices, and with the growth rates they're going to be having over the next decade or so, I currently think this valuation is not justified. A lot of people could argue a valuation of double the current stock price, so that currently shows how cheap Alibaba is currently priced. And yeah, we will just have to see with Alibaba. There's a lot of different risks with Chinese stocks, political risk, but the underlying business of Alibaba is absolutely fantastic. And a bit like Facebook, it's an extremely high quality business, and over the long term I expect the market sentiment to change, and then it will do wonders for Alibaba stock. Now what we're going to do is we're going to use Genuine Impact's ranking system to compare all of these 3 different companies, and mainly using the 2 metrics which relate to me the best as a value investor, the quality and value metrics. So we will start with the quality metrics, and Facebook is the clear winner here, a score of 819, which is pretty high to be fair, out of the full Genuine Impact universe. Alibaba comes in second, with that one of an Intel number 3. Not too surprising really. Facebook is such a high quality business, I would expect it to rank higher than the other 2. Then we're going to valuation. It's looking a little bit different. It's looking like Alibaba seems to be the most undervalued out of all of them, and funnily enough Facebook is last, so pretty interesting stuff. I don't really look at momentum because I'm not a trader myself, but if you are interested in that, it's looking like Facebook is got the most momentum. But yeah, it's interesting to see these stats on Genuine Impact. So there we have it. They were some of the best tech stocks to buy now in 2022. So let's go through them again. We went through Intel, Meta, and then Alibaba. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos